Welcome to the Weekly Dose Explainer. Let's jump right in. Have you ever wondered what happens when the entity that creates the rules suddenly decides to step onto the playing field? Today, we are breaking down a massive shift in the global economy. Governments are no longer just regulators. They are rapidly becoming your newest strategic business partner. To really unpack this, we are looking at a fantastic new report from Augusta Global Insights titled, "The Government, Your Best Business Partner." We're going to break this down, visualize the data, and figure out what this huge rise in state-supported capitalism actually means for your portfolio, the future of finance, and global innovation. Here is our roadmap for today. 1. The quantum equity push. 2. Weekly market updates. 3. The Intel case study. 4. Drivers of state intervention. 5. Risks of market distortions. And finally, 6. Insights and takeaways.
Section 1. The Quantum Equity Push.
Okay, so on April 21st, the government announced an unprecedented $2 billion push into the quantum computing sector. But here is the truly fascinating part. They aren't just handing out traditional grants anymore. No, they are demanding direct ownership stakes, actual equity in return for that federal capital. They're literally buying a seat at the cap table of some of the most experimental tech companies on the planet.
Let's look at how this $2 billion pie is being carved up. IBM is the absolute heavyweight here, securing roughly $1 billion. Global Foundries gets $375 million. Then we have a fascinating tier of highly specialized players. D-Wave, Rigetti, and Inflection are slated for about $100 million each to advance their specific niches. And smaller players like Dirac are picking up about $38 million. It is a highly targeted injection of capital designed to dominate the entire sector.
The second this funding structure was announced, investors went all in, driving quantum stock prices sharply upward. Why? Because the market made a very specific bet. They figured that having the United States government as a direct shareholder essentially eliminates your major financing hurdles. It's the ultimate safety net, supposedly accelerating the timeline for these complex technologies to hit the market.
Section 2. Weekly Market Updates.
Before we look at the financial fallout of those tech deals, let's rapidly hit 3 macro updates. First up, sticking with our theme of state intervention, Germany is set to acquire a 40% stake in the defense manufacturer KNDS. This perfectly matches France's existing stake. So what we are seeing here is the military industry being cemented as a new, direct economic cornerstone in Europe.
Second, a pretty startling real estate metric for you. Private equity firms currently own 12.5%. That's literally 1 in 8 of all American apartments. With their massive liquidity and superior financing, they hold a tremendous amount of influence over the housing market. Augusta warns this is an alarming trend, as any sudden shift in strategy from these firms could send major shockwaves through the entire sector.
Finally, 30-year mortgage rates are stubbornly stuck at 6.75% right now. Inflation is running hot, and rate cuts keep getting delayed. Because of this, there's serious talk about introducing 50-year mortgages just to lower monthly payments. Augusta Global Insights points out that stretching debt out for half a century is a terribly risky band-aid that will ultimately push the true cost of homeownership to staggering, unsustainable levels.
Section 3. The Intel case study.
All right, let's get back to the concept of government equity stakes and look at a real-world example. Intel. After the government took a 10% stake in the company via the CHIPS Act, the stock completely exploded. It rocketed up 330%, climbing from $19 to $120. But here's the catch. The fundamentals tell a totally different story. The company is actively losing money, meaning its current PE ratio literally doesn't exist. And its forward PE is a staggering 112 times. It shows a glaring disconnect. This stock is soaring entirely on the hype of state backing, totally detached from current profitable reality.
We are seeing the exact same pattern repeating with MP Materials in the rare earth sector. Despite a 230% stock surge, they're sitting on an astronomical forward PE of over 128. Again, no solid current fundamentals are anchoring that massive valuation. The federal partnership is doing all the heavy lifting, creating a valuation bubble built simply on government proximity.
And if we look back at those quantum specialists we mentioned earlier, the numbers are just wild. They are burning through cash at an incredible rate. D-Wave posted a net loss of $368 million, yet market enthusiasm drove its stock up almost 96%. Rigetti is down over $225 million, but its stock surged 140%. Inflection is losing nearly $32 million and still climbed 23%. They are getting massive stock bumps simply because the government walked into the room, not because they've suddenly cracked the code on making a profit.
Section 4. Drivers of State Intervention.
So why exactly is this happening? What is driving this aggressive shift toward direct government ownership? Well, it essentially comes down to four main pillars. First, urgent national security imperatives, particularly around AI and microchips. Second, fierce global competition. Third, the absolute necessity for resilient supply chains. And fourth, driving domestic economic growth. The government is starting to view these sectors not just as private businesses, but as critical national infrastructure.
Section 5. Risks of Market Distortions.
But as you might guess, pumping billions of taxpayer dollars into unprofitable companies comes with massive systemic risks. We are talking about creating deep market distortions where financial hype beats actual business reality. There is a huge danger of subsidy dependency, where companies just learn to rely on government checks rather than fostering genuine innovation. Plus, you introduce political influence into capital allocation, meaning money starts flowing based on lobbying power rather than market efficiency.
Augusta Global Insights maintains a very heavy skepticism here, pointing out that we've seen this movie before. Think about past interventions, like the bailouts of American Airlines, or the big banks after the financial crisis, or legacy automakers. Historically speaking, when the state takes ownership to save an industry, the long-term results are often completely the opposite of what was promised, usually leaving taxpayers footing the bill for corporate mismanagement.
Section 6. Insights and Key Takeaways.
So let's synthesize all of this. What is the bottom line? We have officially entered an era of state-supported capitalism. For industries deemed strategic, federal backing is becoming the norm. This creates a really fascinating paradox. It creates unparalleled financing opportunities right out of the gate, but it entirely detaches the company's valuation from financial reality, creating deep systemic risks if the music ever stops.
We are witnessing a fundamental transformation in how capital flows into cutting-edge tech. The government is trying to brute force innovation with billions of dollars to architect a resilient future. However, by totally ignoring basic fundamentals like, actual profits, this strategy risks creating a landscape where companies are perfectly optimized for securing federal funds rather than delivering viable commercial products.
Which leaves us with this final critical question. You have to look at the data and ask yourself, are these state-backed equity deals actually fostering genuine technological advancement, or are they simply inflating the next massive market bubble? Definitely something to keep an eye on. This was a short AI-generated summary of the Weekly Dose by Augusta Global Insights. Thanks for tuning in, and we'll see you next week.